Everybody, and thank you so very much for being here and joining tonight. I know that it's late for quite a lot of you. For me, it's 7 p.m., so it is a little bit late for us, but I like doing evening presentations because you get to relax after dinner, kind of chill out before going to bed. So I just wanted to do a quick um, I just want to basically say quickly that I'm here for you guys. Like my presentation is obviously, I want to make sure that you learn something today. But the reality is that I really want to be able to help you guys with any struggles, any questions that you have. So please, please, please send me questions. I love questions. And the whole purpose of me being here is so that I could actually answer those questions and not just do a presentation, just, so I do a presentation. It's all about you guys getting the most out of this presentation. So please let me know any questions that come up during the presentation. All right, so tonight what I want to talk about is understanding market language and how to spot the high probability trades with analysis. So we are going to go into the live market because there are many markets that are actually still active during after hours, I guess you could say. And that's kind of the cool thing that I want to talk about later on as we go. And so I just want to say hi. I am Marina, the Trader Chick. And I just want to do a quick intro of who I am. This is me. This is my family. I am an expat. I live in Antigua, Guatemala. And that's why I was saying it's 7 p.m. for me. I'm 1 hour now behind Eastern time. And my husband's Guatemalan. That's mainly the reason why we live here now. And I am trilingual. So I speak 3 languages. I'm actually a refugee from the Soviet Union. So I speak Russian fluently. It is my mother tongue, but it is not my real tongue anymore because I pretty much grew up in the US pretty much my entire life. So English is my real language, I guess you could say. But I've also been now living for almost 20 years in Central America. We first lived in Costa Rica and now in Guatemala for almost 12 years. And the main reason why I bring up the fact that I'm trilingual is not to be like, oh, wow, how cool it is. But if any of you have ever gone and learned a new language in your late 20s or 30s or older, you know the process and the complexity of learning that new language, right? Like Russian was my main language. English I learned when I was 6, so I don't even remember learning it. It was that simple, right? It just, when you're a kid, it just happens super easy. But Spanish I learned in my late 20s. And the reason why I could understand learning a new language, especially in later years, is because the first year, everything was a process. I had to translate everything in my head. Nothing came natural to me. It was always complicated. I was only able to speak to one person at a time. Everything they said, I had to process in my head and translate in my head before I was able to get it out. But then one day, I just kind of woke up and I just spoke Spanish. I just spoke it. I didn't need to have any translation. I didn't need to have any process happen in my head. Obviously, I'm still not 100% fluent, but it's that transition. And after trading and being in the markets for a long period of time, I recognize that the market also has a language and it speaks to us. And I think that was my biggest revelation ever. And it happened almost 2 years of me working really hard to learn how to trade and just in the markets until I realized there is a language. And once I started to understand and listen to it, everything changed for me. And so I really want to focus on that because language isn't only about Spanish or English or Chinese or French. Whenever any business you're in, there's a certain vernacular that goes on. And I'm not talking about taking shorts or going longs. I'm talking about, other things as well. Like it's not only like words, it could also be the signs and the symbols that are going on that you understand as well. And that's pretty much what happened. Before I was a day trader, I was a fitness instructor. I lived in Manhattan and I was a fitness instructor throughout the majority of the Manhattan gyms there. And I was a travel writer. And the reason why I bring this up is kind of because I get so many people that, talk to me, oh my God, I don't have any math background. I don't have any financial background. I don't think I could be a trader. I was a fitness instructor and a travel writer. I still actually have my travel site. This was my first baby online. So anyone can actually do trading. Anyone can learn it, right? If you have that, I call it the itch, the trading itch. If you have that itch, anyone can scratch it, and you have to do it. Obviously, there's work involved, but you do not need to have any sort of a financial background, a math background, or anything like that. You come from any background and anybody could really do it. And that's the awesome thing about day trading, right? So before I get into anything, I have a worksheet that I have made for you guys that you can follow along with this presentation. It's completely free, 100%, makingofadaytrader.com. You can go and get it here, makingofadaytrader.com. Okay, so you could follow along with this, hang on one second, with that particular document, makingofadaytrader.com. Okay, so I want to start to talk about the basics of day trading, because every language begins with the basics. And if you don't understand the basics of day trading, it's really going to be difficult for you to be able to do the hard stuff, right? So right now I am in this amazingly unique position of being a mother of a 16-year-old who is getting their driver's license. And it's really awesome because my son sits in the car and he doesn't understand anything. And I've been driving for over 35 years. So you don't even realize that there is a language in the car and the basics of driving a car. Like, he didn't even understand where the gear shift was. He didn't know the difference between a brake, a clutch, and an accelerator. He didn't understand when we were saying, look in the rear view mirror. All these things were new to him, right? But when you get in the car, they're so basic, they're so automatic to you that you don't even realize that at one point you learned all of that. And it's the same thing with day trading, right? And one of the biggest things that I realized, that when I was learning how to day trade, no one actually ever teaches the total basics that makes it automatic. And I think what happens a lot of times is that a lot of people just get in and start, just literally put money in the market without fully understanding. And even I've noticed, like, some people that come to me that have been trading for a long time, losing a lot of money in the markets, coming to me, wanting to work with me, and they don't know the difference between buying and selling. Yet these people have been putting their money in the market. And I'm like, how are you able to do that if you don't know the difference between when you're going to go long and when you're going to go short? So these are some of the basics, right? So that's what I really want to talk to you about. It's an automatic thing. When you look at the market, you should not be wondering if the market is going up or down, because that is just an automatic basic, right? But it starts with understanding. So every trader, before you begin day trading, you need to actually have a platform, and some people use indicators. I personally am now down to only 2 indicators. I am only down to 1 chart. When I first began, I had 3 monitors going on. I had over 10 indicators going on. All it did for me was to put me in total massive analysis paralysis. I was constantly getting caught up on all of this, stressing out. And when I finally, like, totally, I blew up my account several times, I decided to just step away. And when I finally came back, I pretty much stripped my charts completely to bare naked charts, and then eventually recognized that I could just do 1 chart and use only 2 indicators. So the 2 indicators that I absolutely love are EMA lines, which is the exponential moving average, very different than the moving average or the SMA, okay? So it's the exponential. It means that it's looking at the time frame right in front of you, rather than 52 weeks or 1 year or whatnot. And I also use the MACDs. I find that the MACDs are the least lagging indicator there is, because indicators in reality are quite lagging. So I want to make sure that my indicator isn't a little bit lagging of what's happening, but can be more informative in what's going on right now. And the MACDs I find to be great. Like, they will tell me when there's a weakness in the market before the actual weakness is really out, like really in front of your face. So it's kind of giving me like an indication of a very high potential what's going to happen. And that's really what it's all about. It's about us knowing the higher probability of what's gonna happen, right? So MACDs are like that for me. And if you are looking at my chart, you're noticing that I only have those 2. I do not use a volume indicator. Volume indicators are notoriously known to be lagging. So what I use is a tick chart. And basically, as if you look at my bars, each bar is 610 tick charts. It is probably the most 610 transactions going on per bar. So I know with that movement, how much is happening in real time. Okay, so once again, before we hop into the main course, remember, you could get my worksheet completely free that is going to go along with the actual presentation. It's literally what I use when I sit down and trade. So please get it completely free, makingofadaytrader.com. All right, so let's begin. Market movement and the breakdown of a trend. So you cannot get any more down to the basics, but trends, understanding trends. And we all know that there are three trends, right? We know that there's an upward trend, we know that there's a downward trend, and we understand logically that there is a sideways trend. The thing is with a sideways trend is, I call it the trader's worst enemy, because there are many ways to call it a sideways trend. It's the channeling market, it's the chop, it's the indecision area, it's the exhaustion pattern, whatever you want to call it. The bottom line is, it's where there is pretty much no movement and the market is indecisive, right? So understanding that is really huge, and being able to spot it. And that's really what I want to talk about, because that is super important. Because I can guarantee you, I can completely guarantee you right now, that if you go back and check all the trades that you are tracking, and I certainly hope you guys are keeping track and back testing your trading, that you will notice that probably 90% of your losses happen in the sideways trends, in the chop, in the exhaustion patterns, whatever you want to call it, the transition, consolidation areas, right? I get that. I know that for a fact. So it's not even like something that is just me. I know for a fact, this is the number one complaint of all traders, is that they end up losing all of their winnings and even more during these areas, right? So understanding them and spotting them is going to be a game changer. So that is really what I want to focus on with you guys today. So what's a trending markets? So again, I just wanted for you guys to kind of get the, a little bit of an idea of it. Downward trend, then we have this consolidation trend, right? We have this consolidation sideways movement and an upward trend. Okay, upward trend. Basically, it's when each pivot is higher than the other pivot, right? And the pivots continue going higher. That's all it is. It's called a bull market. It's called the trending market. It's called a market going up. It's also when you are going to be looking for buying or going long. What does that mean? You're entering at a price that is low and you want to exit at a price going that is higher, right? That is what it is. Going long, buying in the market. Okay, then we have the downward trend, right? When each pivot is lower than the other. It's literally mirror image. And day traders, we make as much, if not even more, shorting the market when the market goes down. You do not want to limit yourself because of that. What is it? It's selling. It's going short. What does that mean? That means that you are entering at a higher price point and exiting at a lower price point, and you're taking the profit in between. We do not care who else is getting out or who's there. It's not about that, because that's when you start to put emotions in it, right? It's about understanding the technicals. And if it's the right setup for you that is going to go short, then you're going to go in and go short, because that's what we do. Our job as day traders is finding those technically correct setups, right? Shorting the market is when you are banking on that market to go lower because your technicals are telling you so. Okay, another word for down market is the bear market, market trending down, whatever you want to call it. Those are just words. The bottom line is understanding what is happening in front of you, right? So also you could have overall momentums when the market is heading overall in one direction, but you could get mini trends in between. And usually, especially if you're a scalper, and I'm personally a scalper, I go for smaller profits and also much smaller risks. I love those mini trends in between. They're basically what they are bigger corrections, but you could totally monetize and optimize them. But if you don't understand the switches, how are you going to be able to hop on board, right? So let's talk about the consolidation areas and these transition areas. They are literally the trader's worst enemy. Look, guys, if you guys don't understand these, it doesn't matter what you want to, that you want to earn $500 a day, $1,000 a day. It's literally getting into the car and not having your safety gear on, right? Like, would you permit your 16-year-old to get in a car and not put on their safety belt and immediately get on the highway, like the Autobahn, where there's no speed limit restrictions? Because let's face it, in the live market, there are no speed limit restrictions, right? You could do whatever you want, but you have to be, you're the person that's responsible for your own set. And if you don't understand when a consolidating market is happening, when there's a sideways market, when whatever is happening, you're not going to be able to protect yourself. And it's really all about that, right? So what's a consolidating market? It's literally the channel. It's when it's in between two areas that you're not on. The market doesn't really know what is going on in the market at this time. So why is this the most, I guess the most, it's literally the trader's worst enemy? Why is this the case? So here's the deal, guys. And I know that every single person in this room right now can identify that day trading is an emotional activity. It is a mind, it's emotion, it's whatever, however you want to call it, but that's what it boils down to, right? So what happens when we are seeing a consolidation area, if you're not really understanding what's going on, but because you are now becoming emotional about it? So here's what I mean about being emotional. We all tell ourselves stories, right? We all have these limiting beliefs, and those stories, those limiting beliefs, is what propels us to do different actions, right? So for instance, here's a good example. It has nothing to do with trading, that you totally grasp what I mean. Here's a story that you could create for yourself, right? Imagine your friend, no, let's imagine somebody that you are kind of friends with, just starting to be friends with, calls you up and invites you to a little get together that they're having. And you're all excited to go to this get together. And that person said, you know what, I'll call you tomorrow to finalize everything for the get together. And you're all excited. Tomorrow comes along and they never call you. So what starts to happen in your head? And if you're going to pretend that nothing, you're lying to yourself. That's another story you're telling yourself. Normally what happens is this: oh, I wonder why they didn't call me. Did I say something wrong? Maybe they didn't want to hang out with me. Maybe they canceled and didn't want to tell me, or maybe they just didn't want, maybe some of the other people that they're inviting who are closer friends with them didn't want to go, right? You tell yourself all these bullshit stories, right? And what happens then? You put yourself into a position that you're feeling doubtful, you're not feeling as confident with yourself. And then every action from there, whatever it is going to go from you feeling less confident, right? Or whatever. This is, again, a story. Turns out later, 2 days later, that person called you up and said, oh my gosh, I'm so sorry. My phone fell in the water and I didn't have a phone for 2 days. Basically, everything you created in your head was a total story and a lie, and your whole day revolved around that story, right? This is what consolidating markets, these transition areas, do to traders. There are two types of traders in the market. Literally, we could break it down to two types of traders. One kind of trader is the trend is your friend kind of a trader, right? When you believe with the trend. So when a trend is your friend kind of a trader sees these consolidating sideways markets, what do they start to tell themselves? Again, this is stories. You know what? The market's been going up all day. I'm going long. Then the other type of a trader, which is the contrarian trader, and that was me. I still am a contrarian trader, but now I am much more technical, but I was a total contrarian trader. And what is a contrarian trader? I used to see a market do this. You know what? The market's been going up all day. It's got to correct. I'm going short because it's going to change direction. Again, total bullshit story, because the reality is the market is going to do what the market is going to do. And in this case, what is it doing? It's going sideways. It's not going to go up. It's not going to go down because you think so. It's going to do what it's going to do. But what it is going to do is eventually give you a confirmation if it's going to continue breaking out and going up, or if it's going to change and transition into a new trend. We as individual retail traders have to understand that, and we have to respect what the market is doing. And that boils down to three actions that we as traders do. The three actions are knowing when to get into a trade. 2, knowing when to get out of the trade. And 3, probably the most powerful action and the most underused action is knowing when to stay out entirely. Okay, people don't realize how much work it takes for us not to just get into trades all the time. But the action of sitting out is probably the most powerful one. And when you can master that, because you are reading what the market is telling you, I can guarantee that you will probably be holding on to 70% of your profits, literally. Okay, because new traders, especially newer traders, they are trigger happy and they believe that they have to be in and out of trades all the time. When I first began, because I'm a scalper, I only go for like 1.5 to 2 hour sessions. I was getting in like 40 to 50 times. It was absurd, absolutely absurd. If I wasn't winning or breaking even, I was definitely losing on the commissions, right? Now, if I go into the market, maybe I'll be there for 30 minutes to an hour. I might go from 1 to 3 really powerful, high probability trades. And let me tell you, those are the best ones out there, not the 100 trades you're going to be taking simply because you believe you need to be taking trades. Consolidating areas. This is what they look like. And you don't know if it's going to transition and you don't know if it's going to continue, because our job is to sit and read what the market is about to tell us. And that is super important. And it could be small consolidation areas or it could be large ones. They don't matter, because if you're going in for smaller targets because you're scalping, if I was continuing here to continue going short, or if I was going to play on my contrarian game, it's a 50-50 shot, and you never want to be a coin toss, right? You might as well just do that no matter what, and then 50-50, and that's not the way you trade, right? It's not a prayer. It's understanding. It's taking strategic moves. Okay, this is what all of these consolidation areas look like. Then they could be several, and you could have a breakout. You could get in on a breakout trade, and then when it starts to consolidate it again, you have to sit it out and wait to see what the market is gonna do. Okay, this is where almost all the money gets taken, and I know that everybody here could totally relate to that and understand. So the thing is, how do you know when these are happening? It's about areas, right? It's about support and resistance areas. Look, the market respects areas, and we as traders, we need to respect what the market respects. And that's understanding what those are. So a good way for me to explain support and resistance areas, besides what you're looking at here, it's literally your safety belt, your security belts, all right? Again, imagine you're a 16-year-old wanting to learn how to drive a car, and they maybe figured out how to turn it on and how to move it forward. And now they're like, you know what? I'm going to go out in Formula One and I'm going to race, because let's get real. Being in the live market is like a Formula One racing is race day, right? I mean, your adrenaline is pumping. We are, our emotions are high. Now, would a Formula One racer ever get into their car and not have their helmet and their safety gears, their seatbelts on? No way. Like, they wouldn't even think of that. Yet us traders or new traders, because there's no barrier to entry, get in and they don't have anything going on, right? They're just getting in because they have no clue. They don't even know if they're going high or low, right? So nobody puts on their gears, and then they're like, oh my God, the market is too risky. It's a gamble. No, it's not. You don't understand how to do it right. So if you understand where the areas are, what the market is respecting, what the market is telling you, you are going to definitely kill it in the market. Kill it instead of losing the money. So how do we do that? How do we put on our safety gear? Support and resistance areas, right? These are those areas. What is a resistance area? What's a resistance area? It's literally the ceiling of the market. It doesn't matter if it's a market trending up or if it's a channeling market, it's the ceiling. And it happens after 3 or 4 or more hits, pretty much in the same area. It doesn't have to be super specific. It's around the same area. It's a resistance area, and resistance areas can repeat. And not only resistance areas can repeat, and the market respects those areas and can revisit. So when you have your safety belt on and the market comes back to that area, you're not going to crash by continuing going in a direction which the market revisited. because you know that that is an area that is respected and important, and something is going to happen there. And usually it does, until it could either break or transition to a new trend, right? Resistance areas. What's a support area? The exact opposite. It's the floor of the market. Identical. Again, we don't care if it's going up or down. All we do is understand what is happening in front of us. It's the floor of the market. It's when it's hitting the floor in a relative area 3 or 4 or more times. This is a support area. Okay, support areas, they are crazy, crazy important for two things. Is it going to change the trend, or is it going to continue and break out? If you don't know what a support area is, if you do not have your support areas in place or your resistance areas in place, that is those areas. I can guarantee you can go back into your trading journals right now and see when you are losing the money, and these are those areas. Okay, resistance area, support area, these are the channels. This is how we recognize it. This is how we start to put them into shows so we know what is happening in front of us. Okay, now again, look at this particular area. Do you even want to trade a market that looks this choppy and grindy and uncertain? Absolutely not. Yet I cannot even tell you the amount of people that go in here because they think they could beat the market, or they think they could predict what is happening in the market. Look at that ugly, ugly behavior, right? This is those channeling markets. You don't want to be in those markets in the first place, right? So remember, support resistance areas. If you guys get nothing else, support and resistance areas, they are your seat belts. So how do you start to spot the beginning of these areas, right? It's one thing when we're already in it. How do we know from the very beginning, from get-go, when it's starting to happen? And that to me is reversal areas and divergences. And I literally call this the trader's map to the shift in direction and trend. This is the telltale signs of when the market is a high potential of reversing or slowing down. And you never want to be in the market when it is about to reverse, you don't know 100%, or when it's slowing down. Okay, what are reversal patterns? You guys probably have heard of them. Double tops, triple tops, head and shoulders, double bottoms, triple bottoms, right? It's when you have these kinds of positions. And when you couple it with divergence, that's it. Like for me, that is the golden sign. I personally don't go anywhere near the market once I already see a reversal pattern. But when I have a reversal pattern coupled with divergence, I know that it's a 90% chance that I am not going to be able to do a good trade there. And that is through back testing and understanding what the market is telling me. So if I have these pivots going up and my pivots of my MACDs are starting to go down, that's showing me weakness in the market. Okay. So if I have a double bottom and a divergence, are you kidding me? Like that is 90% telling me that something's about to change. That could be the beginning of those sideways markets, or it could be a complete reversal pattern and change direction. But it's really important to remember, just because you're seeing a reversal pattern, especially with divergence, does not mean the market is going to change direction. So you do not want to start to already go in the opposite trend without knowing 100%. Okay, and that usually happens with confirmation. Double bottoms, reversal patterns, divergences. This is the key to really understanding what the market is telling you. It's literally like seeing a blinking orange light and you know you have to slow down. It's that yield sign, right? Okay, now I want to put it all together. But first, remember, makingofadaytrader.com. Get your cheat sheet here, makingofadaytrader.com. Everything that I just explained right here, makingofadaytrader.com, completely free for you guys. Go and check it out. Go and get it and just use it. That's what I use. You can print it out. It's a PDF document. All right, so breaking out of areas. If you don't know when you're seeing these channeling markets, when you're seeing support, or if you don't have your support and resistance areas in there, you're not going to be able to spot one of the most important moves the market has for us. And it does not matter which market you guys are trading in at all. Okay. What is that? It's the breakout. We've all heard of the breakouts, yet if we don't understand how to spot it, how are we going to be able to do it, right? So here's a breakout, right? This is what it looks like when you have your area in place and then it breaks out. So I want to tell you guys in layman's terms so you really understand what a breakout is and how to play with it, because this is probably one of the highest probability trade setups you could possibly have are breakouts, okay? So here's how it goes. Imagine you are living here. This is you right here at the very bottom of this pivot. And your friend calls you up and they're like, hey, come over, let's hang out. You've been to your friend's house 1,000 times. You know the drive. You could probably do it with your eyes closed. So when you hop in your car, you are super confident. You're headed to your friend's house, right? You get in the car, you hop on the highway, and you're going north to your friend's house, right? But all of a sudden, there's a huge detour sign and construction worker is telling you to go to the east because they're fixing the road is closed. So I don't know about you guys, but whenever I sit in a detour, whenever I'm in a detour position, I start to freak out. First of all, what if they stop showing me the detour signs and I get lost in a place that I've never been to before? What if the detour is hours long and takes me through all the smallest, littlest villages, and there's going to be traffic, and oh my God, I don't know where I'm at. It's going to get dark really soon. What if you finally drive in these little roads and they're telling you, you know what? Sorry, the road is totally closed. You're going to have to turn back and go home. And I freak out. I'm like, but what if they don't have a detour going home? I don't know where I'm at. So basically, I am completely in doubt. I'm freaking out. I have no idea where I'm going. That is also the consolidation area. That's that indecision area. Do you guys really want to be taking trades while you're in like not really understanding what is going on? No, you don't. You don't want to be there. So whenever you guys see that, remember, it's those detours. But then all of a sudden, after you're in a detour, the construction worker opens up the road and says, all right, guys, get back on the highway. You're all good. And get back on the highway and you know where you're at and you're headed to your friend's house. You have that renewed, powerful energy of confidence, right? That is the breakout. Okay, the breakout is that renewed energy in the market or in whatever is happening. You're back in it, right? So you're headed north. You this deep going, what's going on, totally indecision, but all of a sudden it reopens and boom, you are headed up. That is the breakout setup. Okay, it could be through a channeling market just the same, because remember, we don't know which way we're going with the channeling market. And then boom, it opens up and we are headed in the direction of our friends with renewed confidence, right? So the way I do the breakouts is I use my indicators, obviously. So I use my EMA lines. This is where I take my trades from. Basically, you cannot imagine an archer, you know, the people with the bow and arrows. Imagine a competition that they're in. They always have a place that they stand from before they shoot their arrow into the target, into the bullseye area, right? They would never just be walking around aimlessly. Yet traders, it's amazing to me, simply because there's a long bar, boom, they're in. What does that even mean? You need to know where you're taking your trades from because you can't go in market. Day traders don't really go in market. We always have a limit order put in because we know exactly where we want to enter. And that's the important part, right? So another bonus, I call this my initial reaction trade setup. And it's when the market transitions because again, reversal patterns, sideways markets, they also, once they transition, if you have that right confirmation, you want to be in the right place. You want to be ready for that transition. And a new trend is always the best way, the one to enter, right? Because that's when you have the most amount of energy, right? Imagine you want to go running. And the minute you run out your door, that's when you have the most amount of energy, right? So if I was to go in and say that you're going to be running longer, the longest it's going to be usually in the beginning of a new trend, right? If I'm doing a breakout, which is usually like, imagine a runner that is a little bit tired, but they pop in an energy bar or an energy gel, they get that renewed energy. So in this case, now I'm looking at a new transition trade, a new trend trade. And that's what I look at. Again, all with my indicators and the MACDs. Okay, so this is what it looks like, is when I have that confirmation. My MACDs are strong and powerful, totally go through the zero line. Everything is going down, barely any retracement, no divergence. It's the very first pivot. Boom, I enter, and then I have so much more room for a larger profit as well. Okay, guys, so remember, makingofadaytrader.com. This is where everything that I just went over, I literally go through this with you guys, okay? So what I want to do now is take you through a live analysis pretty much of the live market. So as I mentioned before, I personally trade the ES minis. That is the futures market. It is literally I'm on the futures market working with the S&P 500 index, okay? So this market is pretty much open 24 hours per day. It does close, it shuts down, I think, for like 15 minutes to 45 minutes for maintenance, but it is open at the moment. It's super, super slow, but it is open because obviously it is the S&P 500. So it's a really fantastic market during, I call it Wall Street hours, 9:30 till 4. So, but if you look here, I'm going to now show you my actual chart. This is the chart that I use. So here is the ES. That is the instrument that I use. And like I mentioned before, I trade the 610 tick chart. I do not trade time frames because with a time frame, you need to put in a volume because it's important to know the volatility, right? If you have low volatility, it's, the market isn't going to be moving as quickly. As you can see right now, the volatility is really, really slow. So each bar has 610 transactions. And what I have is called the tick counter indicator. So it's literally telling me what is happening in the moment. Right now, out of the 610 transactions, 420 were already taken. That means I have this many more left, 180, as you can see each time a transaction happens, because that's it. That's the reality of what we need to know. How many transactions are happening in the moment? We don't know, though, if it's going short or long, but that doesn't matter because it's about the volatility and the movement that is actually happening in the market, okay? Oh, sorry, hang on one second, guys. Let me share my chart. Are you able to see this now? Let me know if you guys are able to see the charts. Okay, cool. Thank you for letting me know. All right, so let me go back and kind of explain a little bit again. So here is my chart. It's the ES Mini, which is the S&P 500 index. And you can see here, the prices are pretty much similar to the S&P, right? So each bar is 610 ticks. Here is the thing. Here is what my time frame technically is. I don't use minutes or anything. I use ticks. And you can see that tick charts are really common. They are not unusual. They're not unusual at all. Okay, so right here, it's a 610 tick chart. It's the transactions. Right here, I have the ticks remaining. That means the amount of transactions that are remaining. It works down from 600. So as of right now, it took 510 transactions. So I have about, yeah, you see, that was a quick one. That means quite a few people went in all at once. So I have this many, and once it goes to zero, it changes the bar. So it's literally in real time movement, and that's the beauty of it. But as you can see right now, we have a pretty significant resistance area forming, right? We had this pretty good strong run up, and now we have this resistance area. And today overall has been up and down, right? But it has been a super volatile, beautiful moving day. Okay, so as you can see, we've had runs up, but we've also had pretty significant areas right here. As you can see here, it tried to go down. It didn't really work because, as you can see, it formed a support area. Then it broke out. Again, didn't go that far. Transition going down. Here, then tried to go up. This is that overall momentum that I'm talking about with this quick retracement. It's that correction. But if you look at it, it is a solid, beautiful trend that I would definitely be in at least one trade, if not two trades, right? And because with the futures market, the cool thing is you could go in with contract lots. So even though I could go for smaller profits, if I'm going in with 10, 20, 30 lot contract loads, that means I just multiply everything by that amount for the exact same target that I'm going for, right? So this is what that market looked like today. And we've had a lot of really important areas. And if I continued, even though there was massive strength here, but it didn't go anywhere, right? It was kind of caught up in this support area. Again, it was more of a channel, and boom, it transitioned and changed direction. If you don't know what you're looking for, you're not going to be able to understand the movements, right? So after this channel, I had this beautiful run up, massive energy and spacing and strength in my MACDs, no divergence. I would enter here. There are so many incredible opportunities for today that, I mean, there was like 3 or 4 powerful trades within 30, 45 minutes. And that's all that I need in the market, right? So you could see here as well. This is already at the end of the day before the market closed off. Oops, hang on a second here. And then this is right after the market reopened. Like I said, it closes for maintenance. So once it reopened, this is what happened. There was like a renewed energy because this is now a different market altogether. It's people in Asia, it's people in Australia that are just getting into the markets. So you have to understand all that, right? So this is what my charts look like. And this is all I need. Just these two particular indicators. So let me go back to, hang on a second, to my presentation. Where am I here? Here we go. All right, so I should be back in the presentation now. Okay, so now, wasn't that fun? Imagine if we could do this together every single week. I'm super excited about this part of the presentation right here, because this is what most traders can do to truly unlock what is holding them back. And do you guys know what that is? It's how do you know if you are doing it right? So let me break it down for you. I've made something very special for you. When you get this cheat sheet, you immediately get put on an exclusive VIP list. And I want you to encourage you to get on this free cheat sheet at makingofaDayTrader.com, because this could truly be the turning point for you guys. It's a special invite coming into your inbox. And it only comes to you guys, people that are live during the presentation. Okay, it's only for you guys right now. And here is what I have for you. So many of you have asked me during and after presentations if I have a program. And I always hold back because I don't want you just buying another product. However, I created something really special, and it's called Simplifying Day Trading Futures course. It's my signature course with short bite-sized videos and explanations that literally show you what I do every time I sit down and trade myself. And that's literally what the cheat sheet was. And you could do it from any device. If you are on your phone, your laptop, your computer, your iPad, and you will literally be, in essence, sitting with me side by side. But again, I could only make the special invite to people who get the cheat sheet at makingofaDayTrader.com. So make sure you go to that link and subscribe right now while we are live. And I want you to have this some super special right now information is I want you to give this to you. I want to sit next to you, and it's if it's only this is only special for participants that are here right now. I'm offering 6 months one-on-one mentorship. You are sitting with me, with you. So remember, you have to go to makingofaDayTrader.com. You go there for your free cheat sheet, and it automatically registers you to be on that special list, but only the people who register for the cheat sheet and only the participants of this presentation. And on top of that, I'm giving you an extra bonus. 6 months free membership to my live trade chat room, where I'm live with you, analyzing in the live market and taking trades live with you watching and understanding. And not only that, do you get me to mentor you for 6 months, and you also get 6 months of sitting live with me in this membership that I do weekly. It's a live trade chat room that I do it weekly. And this isn't like me hiring a bunch of moderators. It's me live implementing everything that I teach you and watching you asking questions and implementing alongside with me in the live market. The only way to get this is if you get on the list or the cheat sheet right now, because the program and all that I offer is so robust with so much information. I'm giving everyone lifetime unlimited curriculum access. Now, I'm not going to release the price because I want to surprise you and delight you with the value driven of this particular course. What I will say though, it is literally less than one average trade. It's literally less than the average trade that majority of you guys do. I can guarantee that. Makingofadaytrader.com. But here's the thing, okay? As with everything, there is always a catch. I only have 25 spots available. Due to my one-on-one mentorship, I'm only able to take on 25 new students, because at this time, so much of that is that you get my full attention and my commitment to your trading. So I'm only able to take on 25 spots. This is only going to be open to the people that are live at this presentation. So remember, when you get on the free cheat sheet and you get put on the VIP list, you are eligible for the 6 months one-on-one mentorship, literally working with me one-on-one, personalized feedback. And on top of that, 6 month live trade chat room. And you get unlimited lifetime curriculum access to my course. So if you haven't gotten the cheat sheet yet, go now, get it. Makingofadaytrader.com. Okay, so let me know if you guys have any questions or any way that I could answer anything else. But this is only available to people that are right now live on this presentation, makingofadaytrader.com. So let me know if you guys have any questions, and I will be happy to answer them. And again, I want to say thank you so much, guys, for first of all taking your time out. I don't know where you guys are from all over the world, but if you are from the States or Canada, I know that it's pretty late. But in Europe, I guess it's the perfect time, right? It's the middle of the night, so it's not really the perfect time. You're sleeping. So I appreciate everybody just being here, period. And let me know if you guys have any more questions. And thanks, Anka, and thanks, David, for having me. I really appreciate it. And happy Thanksgiving for everybody who is from the US.